And a very good morning to everyone, and welcome to the Friday, September 24th, 2021 pre-market rundown. This is Andrew Horowitz. I'm the co-founder of TriggerCharts, and we are here today to discuss, as we do each and every Friday, some ideas on how to hopefully provide you for better technical analysis response to the indications of what is happening in the markets. What we do is we talk about the markets, we talk about what's the backdrop, and more importantly, we talk about the indicators that help us understand and provide us with the confidence to enter, exit, or even stay away from trades. You know, one of the things that I've learned over the years is that one of the best trades are those trades you don't take sometimes. Those things that you sit on your hands, you just stay away. You don't get involved in them. The reason for that is that sometimes we feel inclined to trade. Sometimes we feel that, well, if we're not trading, something's wrong. We have to be in something, whether it's short or long, right? So many of you probably have that circumstance. Many of you probably think that quite often, that if I'm not in something, I'm missing out. Well, that's not always the case. The fact is that oftentimes you really have a situation where it's better to stay away. It's better to think that, well, maybe that trade wouldn't be worthwhile, and to use that extra level of care. Something to think about. Something else to think about is that the understanding that we have here, the disclosure that we need to tell you, is that investing involves substantial risk. Of course, past performance is not a guarantee of future results, and everything that we talk about today, please consider for educational purposes only, and as always, use your best judgment when investing. So we have a variety of things to talk about today, and we'll get right to it. Let's take a look at the top line first, talk about the futures. Now we're seeing that the futures are a bit weak after a massive, blistering hot run over the last 2 days. We saw that significant amount of the decay that we saw due to the situation over the weekend with China's Evergrande. We saw that there was a rebound, like we've seen so many times. Look at the chart to the right. We see that massive drop and gap down, and all the way down to a significant level. If you remember, we talked about some of these levels over the last couple of weeks. I said, hey, there's downside to about 369 that I saw coming here, and that was when we talked about last week. There was some support there, blew right past that, couldn't get above it, came down to the next level of support, about 362, but still pretty sloppy action overall. And what we're seeing today is kind of a take back after maybe some of the numbers we saw last night from Nike, maybe some of the things that happened overnight in China again, the concern that going into the weekend, there could be some further, news out of China's Evergrande, which would be a very significant default. $300 billion is on the table of debt, $87 million worth of debt repayment that they missed on Thursday. They still have supposedly a 30-day grace to pay that, but we are inside of the default zone. So we see the SPUs are down about 0.5%. This is the S&P 500 futures. The NASDAQ futures down about 0.75. Gold down slightly, not doing anything as a protector. And we're seeing a major move in the crypto space today due to the fact that China basically put the kibosh once again on crypto. Saying that, you know what, not only can't you do the mining here, but you can't hold it, you can't use it, you can't trade it. Well, they can hold it. You actually can hold it. That's something they said. They specifically called out Bitcoin, Ethereum, and Tether. And what they are talking about is that any transactions, and if you're involved, and even providing network services to some of these companies, if you work there, you could come under what they call investigation. Now, one thing you don't want to do in China is come under investigation. You know, that's kind of black bag over the head kind of stuff, taken somewhere, and no one knows where you are for a while. So something's very concerning with what's happening there. And that's our theme this week. The theme is the China scare. Multiple scares, the continuing saga out of China. Well, they're putting restraints on gaming and gambling. They're putting restraints on technology and making money. They're putting constraints on coins and cryptocurrencies. They are really going after all sorts of areas in their markets. You know, started with the kibosh of the for-profit educational firms, and it's just moved all around in a very quick manner. Right now, the biggest issue that we're facing is some of the things they did over the last number of months to curtail the excessive amount of debt that was being captured and provided for with regard to the property developers. And Evergrande, the number 2 overall property developer, just did a borrow and build. For years. I was there. I have physically seen with my own eyes. I got footage of this too that I took on my camera of miles and miles and miles. As far as the eye could see, ghost cities. Very frightening sight. And that is now catching up to them. So the Evergrande situation that we're seeing and that you're probably hearing about is something you really need to pay attention to, because while we may not have an extreme exposure to China's Evergrande situation here, what we do have is exposure to the fact that China's economy is so integrated with the rest of the world. This is going to be a situation that spreads there if there is a default and could cause major ripples for the rest of the world. Should we be worried? I think we need to be on guard. We need to be looking at our portfolios and understanding where the impact could be. We need to understand where the banking or the sectors that could be really hurt by this around the world stand. And what impact will this have even further, causing delays on the supply chain and things of that nature? So China right now, the response is not much. They say they're going to wait till the last minute. Do not bail them out, really. Oh, okay. I mean, I think that in the end, that Evergrande will be bailed out, or one way or another, there'll be something done to rectify the situation, because this could be a very bad situation. And listen, I talked about this earlier in the week on one of my podcasts. When was the last time, I want you to think about this, when was the last time that we were told, don't worry about contagion from China? It's all contained. It's not going to come over here. Now, that was different. That was back in January, February of 2020. And clearly, that wasn't something that could be necessarily solved by just throwing money at it, like this could be in theory. But I think what's happening right now is the same playbook is being used of not to worry. And we're taking that to heart, believing that. And I just think that's something we need to look at a little bit closer and be more on guard about. The Fed, let's talk about that. New stance. If you watched Jay Powell give the presentation on Wednesday at 2 o'clock, was the rate decision, which of course was nothing. 2:30 was the press conference. During the press conference, Jay Powell talked about, we're going to start doing some tapering eventually. And it was kind of a sooner than later, but they spent a lot of time talking about the fact that tapering is not liftoff. They use liftoff like it's, this big thing. Liftoff being the idea of what is going on with rates. Will rates rise? And the idea that they are tapering, which is going to be slowing down the purchase of bonds, that does not necessarily mean that it is a change in their interest rate policy. That's important, but don't forget that they're doing this to shove it down our throats to make it more palatable. The fact is that the taper is going to pull out liquidity from the markets. If it was designed to add liquidity and to stabilize, don't you think that pulling it back drains liquidity and destabilizes to a degree? Has to. It's kind of like when people talk about how, hey, higher gas prices are not a problem for the consumer, but yet lower gas prices are benefiting to the consumer. You can't have both. You can't. But investors were comforted with the latest discussion and conversation that he had, because basically they did, in fact, keep on pushing the idea and the notion that they will have a significant amount of time before they do any kind of major changes. And it did look like they were supportive of they always are, of the markets. And very much in tune with the fact that they really got to be careful with regard to what's happening with all things around the world, especially the supply chain. They've come off the idea that this inflation transitory conversation is really going to be anything more than lip service right now. The estimation for inflation that they put up is 4.2% over the next year. So pretty significant. The question is on the indices, well, we saw some oversold situation and a bounce. There was no follow through on the downside. If you looked at that, there was a big drop, and that was a one-day wonder. Look to the right side here, and you look at where we were and where we dropped to. This one day. But you know what? There was no downside follow through. It was, we saw it kind of bouncing and bouncing and bouncing here. A little bit of downside here. One day wonder on the downside, but pretty much a direct response the next few days right up. And that's what we've been seeing as the norm. You want to call it buy the dip. You want to see it, the people just rushing in with cash from the sidelines, whatever you want to call it. The fact is, and the fact remains, that where we are right now is in a situation where there is a significant amount of desire to, hey, let's just get in anytime something drops. You wonder if Bitcoin's going to say the same kind of move over the weekend after an 8% drop down to 41,000. It was, 40, what was that? That's 45,000 just a couple of days ago again. Ethereum also dropping like down 10% today. So still a very volatile type of situation with the cryptos. Right now, volatility is up. It was at 28, the VIX last week, dropped down, earlier this week on Monday, right when we dropped down right here, the VIX was at 28. Up over here, it was 18. So very big moves on the VIX. I would expect that to drive higher today. But when you look at the markets, really, even though we are seeing this choppiness right now, and you kind of extend out where we are on this chart, and you look a little bit further back, kind of believe that while we are in this parabolic move to the upside, you still have a good amount of support at 362. That seems reasonable. Probably 360 is even better. That's where I would look for the support. Let's take that down to 360. It's right about there. Where I like to see that support, right where it came down to again, and right where we have some lines that we can connect. Always looking at connecting lines. Always looking at where can I put my cursor that connects the lines from right to left. Always looking from right to left. Not a lot here, and that's why we saw that move, like that big fast move down, right? Look at this gap that we saw right here. When you look at this, and you always want to kind of take a moment and draw a few things on here. We see that there was this big gap right there of nothingness. That's a big move, and that's what happened. Once we got through that level, we really gapped down dramatically to the next level of support, but it was an overreaction. You can see what happened there, and then came back up. Now, I think that what we're seeing right now on the upside is an overreaction to the upside. There is still a better bet on uptrend resumptions that we are seeing. That's the market that we're living in right now, especially with the excessive amount of liquidity that's there. Also, you got to look at the fact of very little short opportunities, because even though you may see a company that really should be doing very poorly, that really doesn't matter. I mean, yes, we're seeing that FedEx down 20% from its highs, Nike getting that shot overnight down about 5.5%. But these things have been very much contained. And it's kind of like they go down for a while. Some of them may last a little bit longer. We look at FedEx as an example. But some of them, are very, very short-lived. Question is, you want to catch the falling knife. You look at Wynn and you look at Las Vegas Sands, you look at what's going on there. That bounce back was pretty significant. Crypto, that Litecoin fiasco. Question is, do you want to actually do that, right? We're going to do a follow-up on Asana, continuing to deliver clearly great looking out there. I talked about shorting natural gas a few times, talked about it on DH Unplugged a few weeks ago. The chip shortage obviously is something that it has been very significant recently. Earnings season 1 month away. Plenty to worry about, in my opinion. You got prices that are really at perfection levels, where you have the idea that growth is very significant over the last however many quarters due to the excessive amount of money that's been pumped in. We see that the reopen trade, and we have this pent-up demand. We have supply chain issues. All of this was good, and now, in fact, maybe the Achilles tendon for the markets and companies in particular that rely on a global supply chain. There is a lot to worry about. We've seen already companies come out with a significant amount of, I would say, guidance concern. And FedEx just yesterday and Nike overnight today, margins squeezing. Facebook came out with a concern about their advertising. The automobile companies are just a disaster. And any companies that rely on chips, it's good and bad. On one hand, it's good that they have such a supply problem because that's creating back orders for a very, very long time. The bad news is they got back orders, not actual sales. That's a big issue. On the economic front, we saw the FOMC rate decision this week. Again, a nothing burger in terms of the rate, but anytime you seem to have any kind of Fed action or I say more of a discussion that there is a big move in the markets, and usually right now, markets have been giving the Fed the benefit of the doubt. Existing home sales, housing starts, new home sales, some of those numbers were good. There's some pockets of bad. Prices are out of control. You see the Case-Shiller that came out last month up 19% year over year. We're seeing, I think, a bigger move over the last 60 days in terms of prices. Pretty astounding. If you go anywhere in your neighborhood and look, you'll know what I'm talking about. But we do have the Case-Shiller numbers coming out next Tuesday. We have the third revision of GDP coming out midweek. PCE prices also. That's the Fed's preferred index of inflation, of what they see. That will be important. That's a high priority number next Friday. And the University of Michigan, we have the September, a couple of spelling little, I got to talk to some people about this. We have the September final numbers coming out. Couple things to mention before we get to the stocks, and you can put your symbols inside of the chat. Go ahead and do that. If you do want to get a freebie, we have a special offer, as we always do. It is a 4-hour coaching session that is done at your leisure. It's an evergreen system process, 3 sets of videos that you can watch. Anybody that becomes a new subscriber to the TriggerCharts Commander Series, new subscribers, send an email to support@TriggerCharts.com. That's support@TriggerCharts.com. And we will set you up for free as a $199 value. You spend $149, you get a $199 value. I don't know about you. That's a freebie with a $50 kickback rebate, it looks like. Yep. So if you haven't got it and you've been coming to these Fridays all this time, and maybe it's time to check it out. But again, it's only for new subscribers, not for trials. We have Q's to watch. Fomc, which is just rocking and rolling. Garmin doing really well. Doesn't seem to want to give up. That's in the boating industry, as well as the travel and leisure. I would even say exercise. Peloton, another one. Good, bad. Vips, problematic. Q's again, we got that. Marin, FDX, FedEx. And we'll take a look at some of yours as well. But I'm going to put in the chat so you see it. Should be popping up on your screen. Symbols. Send me your symbols. If you hear it's a freebie. Well, that was spelled wrong. I guess it's me then. Let's take a look at a few other things. KRI, where are we? We're a little bit overbought after being a little bit oversold. These oversold levels that we've seen lately have not been too deep. -2s. I like to see this at -4s, -5s. And that is the back up the truck symbol when it comes to the markets. Right now, what we're finding is that there is a very modest dip that we see every, 30 days. That's what it looks like. I mean, look at this. 21st, 19th, 20th, 21st, 21st. It's kind of like right after options expiration. I wonder if we can go back further to see that. Let's go look. 21st, 19th, 20th. Yeah. That was May and June. Yeah, almost once a month. Like what? What's this one? 21st, 22nd starts dipping. So there's some pattern going on with the options expiration. Drive it up into the options expiration, then bring it back down, then only to drive it back up. Maybe that's the call buying that's going on, which would be kind of interesting if you think about it. The call buying that goes on, getting close to options X, right after options X, drop it down after the options come off, and then buy those calls again and press those positions, bringing the markets up, only to do it again each and every month. Interesting theory. All right, let's take a look at this one I thought was interesting also. Got the Spearman bouncing off the bottom, which I thought was really good. So -9, you don't see that very often, but that's kind of a buy signal right in this range here once it starts to lift, in my opinion, off of the bottoms. Okay, let's take a look at, let's take a look at here, and let's go. This stock I want to show you because you can't see the total of all this, but this was SPRT. Remember that support.com? They kept on going up and up and up. Did a 10-to-1 reverse split, which means this would be a $600 stock at this point, down at 20, down to what would this be? the reverse split. So it was 600 before. Really kind of horrible number. The equivalent of this was, if you take out the split and forget about this chart, I remember trading about 80, and now it's the equivalent of about $2.50. So everybody was all excited about that. K-Web, I talked about this a few different times. I said, hey, there's an opportunity on the bounces here to get in here. But I said, you know what? We traded this right about here up to the top, got out of it last week sometime. So back over in this range here. Dropping down again to about 47.35. Right down to support, right down to our support level right here. I still think it has downside action on this channel that we've seen here. The momentum has shifted back below the zero on the aileron. Again, what you're looking at here is the entirety of the Commander series with the addition on this chart of the aileron. I like to look at momentum inclusive. You know, when I'm looking at things and I'm looking at the product of multiple indicators showing me a high level of coincidence, I get a better confidence overall in what direction I want to trade, or if I want to trade it, you know, if I want to get involved or not. So when you're looking at this and you're saying, okay, well, what we know is that when we look at volume and price and we look at the Commander series, and that's all of what we're seeing. Let's look at this chart on the left here. You know, these lines are all the key volume and price levels and swings that we use with our algorithms to find where those levels are for buying and selling and for biases long and short. And that's what you're seeing here, the longs, the shorts. This is giving you everything you need to learn and understand about when it comes to looking at markets, at individual securities, what we're doing on a longer term basis and short term. I look from right to left. It's a ingrained habit of looking on the weekly to the daily and then down to the 30-minute. What are we doing long term and short term? I'm looking here on the Qs, long, 4 weeks on the long side. Let's kind of click that. We know that 4 weeks on the long side, and we know that there's a short profit. Take that profit after it was called right here at 378. That's coming in yesterday after a nice little move from 378, 372. What was that? 378, 6-point profit there. Okay, good. We're seeing that there's a long alert on the shorter terms and a long, what we saw here, right? 30-minute, we got long right about 370. Currently moved out of that at about 373. So another 3 points on that side. So depending on what time frame you use is something to really understand that what we're looking at and what's really important. And the key here is to look at what the footprints in the sand are, where those fingerprints are in the markets with regard to the institutional traders and just the average traders. This is all encompassed in the integration of the Commander series. That's why we put it out like this, because you can see a granular look at what is happening and a detailed view of where those marks are, where are those real key support levels, and then where are the levels of interest. Right now, we saw that top end right about 373. Kind of coincides to where we are on a daily basis right here. 370 at that little island that's being formulated right there. And you look at this and you see that, well, on the 30-minute, it's the same thing. We got to that top and it bailed out. You know, now the short side could be coming back in, get below 372, which we are. And you're going to get a short alert on a short-term chart, a 30-minute chart. But the volume at price, and this is important to recognize, when you're looking at volume at price, when we're looking at these numbers, nope, let's cancel that. When we're looking at the radar screen, or the radar, I should say, the radar that we have here. This gives you a lot of things to look at. Look how wide these lines are from each other. Look how tight these ones are. Look at the look here. You got this B formation. You got the B formation. Here you got a small b. All these things we teach you inside of our user guide, inside of the various trainings that we do. And the bottom line is that once you learn them, you understand them, you can see them. They're easy to look at and find. And all of these things that you're finding here are, once you get them, because they look a little complicated at first, they're like, oh, that makes sense. That's easy. I know. Hey, I got a short signal right here. I got a momentum that's down. I got a momentum that's showing me oversold a couple of days ago, and we pick it up and move on. Anyway, something to look at. Affirm is a stock. This is a buy now, pay later. We tagged this some time ago, looked at this as an opportunity. to get in. We saw the strong momentum on the upside. We actually own this for some clients. We took a little bit of a profit a few different times, bought it down in, I think, in the 60s, down in this range over here. Broke out a couple of different times. Now trading at about 129 up today in a down market condition. That's good. And possibly going to launch out of a major, let's go, I'm going to take this back, a major consolidation that it had down here. Got a lot of good news on this company. I mean, you see this rip above here. You really have to 145 as an opportunity potentially. But I think the better course right now is to take a little bit of profit off the table once we saw this happen and this kind of break down. This is a news-driven rally on earnings. But again, looks pretty good overall to hold this. Garmin's been a great mover. Somebody asked me about this last week. We saw a little bit of a move lower last week on this. Again, not a lot, from about 172, 166. We're talking about a 4% drop, maybe 3.5% drop. Then a pickup once again. Just a really strong stock, and you can see that when you look at the aileron. More importantly, just looking at the general range of this, when we go even to a longer look at this, I mean, just a good-looking stock overall. Let's go back here. What do we got? Peloton, man, a little opposite there. Peloton looking, and I'm going to take off the aileron right now because I really don't want to confuse that situation. I really want to show you just, there is nothing good about this chart. There's no support really to speak of, down to even at best at about 83 right now. All right, you know what? I'll call it here. I'll call that you do have some support about 95. There was the opportunity to take a little bit of a ride on the upside here when they came out with some new products and some things that happened. But yet, it looks to me like a very weak chart. Let me see if there's anything else that I want to really go through here with you. Here's FDX. Ugly situation here. Down again today. High at about 320. Down at about 220. About 100 points, about a 30% drop, and that used to be and should be a big ticket for what is going on around the globe. Same thing with Nike. You know, Nike had that major move up on its last earnings, but the supply chain issues right now at 151, and we tagged this at about 130 something, but 151 is where it's trading down to. Somebody's asked me about Beam. I got a couple more minutes to go through here. Beam's in a consolidation long term. Yeah. This is one of these stocks that just lifted off the ground from $10 to 70. Jeesh. Now consolidating. I mean, you have to get above 36 right there. I'd mark yourself about 37 for an alert. You know, you want to trade this inside, fine. But, you know, what does this have going for it? The only thing that has going for it really did a big moonshot right there. A couple other ones in here. QS, QuantumScape. This is weekly. Let's go back and look at this on a daily because I think it's a better tag on this. Yeah, QuantumScape battery company for automobiles and things of that nature. Looks to me like trying to break out here a little bit, but could be just a short squeeze that happened. I mean, you got a lot of resistance in this. Look at this range right here. When we look from right to left, and let's put on our radar, put on right to left, you know, you did break right through this range, right where you're supposed to. Got up right to this level. So right now, you have a lot of resistance up to about, I would say right there, about 29.16. Huge amount of resistance if you look kind of left what's happening inside of here. Think of these like giant drifts of snow trying to drive your car through there. It's very difficult. You know, once you get above the 32 level, kind of you have till 34. Will you see up to 70 again? I don't know. Somebody's asking me about Unity Software. Beautiful looking chart overall. Well, not really beautiful, really kind of choppy, to be honest with you. A lot more short opportunities, it looked like, than longs. Right now, you did break above, and that's good. It's not necessarily holding. That's not a good sign. Sports down to 130, what? 137 and change. That's good news. Let's see, we had somebody else. IBB. Did we do Asana? I remember if we did Asana. Asana breaking out over the top again. Beautiful looking chart. Something we saw a few different times. Nice consolidation breakout, just beautiful. It looks like it's this stock reminds me of a stock that somebody's thinking about buying or something. I don't know. Something is interesting about that. Good company, good software. IBB in a consolidation again. This is the NASDAQ biotech shares, biotechnology. I don't know. It's consolidating. Really got to break that 175 before anything happens. Hey, listen, thanks for joining me. We'll be here again next week, and we'll talk more, get you more ideas. Have a great day. Have a great weekend. Make some money. Go make some money. Thanks a lot.